Hi, I'm Jay Norris. As always, we need to remind you that trading Forex is a risky endeavor and not suitable for all investors. I'm a 20-year trading floor veteran of the Chicago Board of Trade. I've also written a couple of books on trading which were published by McGraw-Hill and which serve as the textbooks for our courses. And I'm the Director of Education at Trading University. We want to cover a market Aussie yen here and show you how the patterns align and gave us a pretty favorable setup. We wrote about this market last week on our blog at Seeking Alpha, and the story was titled Dollar Yen, Aussie Yen, Everyone on One Side of the Boat. And we talked about how you had a pretty powerful seasonal, which would be bullish for the yen itself, bearish for dollar yen, and we saw how everyone was happened to be long dollar yen in a big way. Those numbers continue to increase too. But really the actionable information that we gave you was that the secondary pattern was down for Aussie yen. So in itself, it's not a big deal. However, when you take into consideration the other patterns and you look at the potential for a short-term shift and how that can affect things, then it becomes more important to us. So let's take a look at what happened. You can still see the secondary pattern was down just by virtue of staying below that secondary pattern line. So as long as price is below that pattern line, the secondary pattern is down. Secondary pattern happens to be for anywhere from 1 month to 9 months. In this case, you can go back 5 or 6 months. You can see clearly it's down. Clearly it's below that line, so the secondary pattern is down. Well, that doesn't necessarily mean a whole lot to us in itself, but what it does mean is if we start to see a shift on these lower time frame charts, then it becomes more significant. Let's go down to an hourly chart. Now I'll show you what we were looking at this morning. You can see the secondary pattern was down. You can see we have a purple line there. Let's tell you where that purple line came from. That purple line happens to be a 50% retracement of this micro pattern down. So what happened, we had a trend line break. Well, we can go all the way back to here. We had a trend line break tipping us off that the micro pattern may be shifting, which it did once it overran these levels here, essentially making a lower low. So we had a lower low there. So we draw a retracement. We're looking to see how market behaves against that retracement, and bam, you hit resistance at that 50%. Let's mark that. That's our micro pattern. So the micro pattern's down, couldn't get through the 50%. Now keep in mind, it could have gone higher from there. The reason we're designating that micro pattern down now is that it's essentially remained below that green line. So you really couldn't get beyond 618 or 625 in that area. If you can't get beyond that area, then you're not going to reverse this downtrend. So we had a trend line break, then we had a lower low here. So our micro pattern is now down. So that's why we've designated the micro pattern down. So now we have two patterns down, don't we? So at this point, I'm going to back it all the way up to a 15-minute so we can see them. We can see that we have our secondary pattern down and our micro pattern is down. So now we have two patterns down. Let's go all the way down to a 3-minute chart now. And you can see I have a line drawn there. I'm going to tuck it in so if we can continue to see, hopefully, that secondary pattern too, because it helps when you can see all these slices of time. You drill down too low of time frames and you start to lose track of things. So we always have to keep track of things. We have to remind ourselves the secondary's down, the micro's down. Now we're going to come down to this super micro is what we would call that, and I'll show you where that line came from. And so we took that low to that high, and look at that, right on the 618. This is the Aussie yen. Hopefully you can go in your own charts and you can see this. This occurred today on 8/13 Monday morning, 8/13/2012. So look at that, right on the 618. So what does that tell us? That tells us this super micro pattern is bearish here. We had a trend line break. You had a trend line break, pretty good. You can see very short term too. You put in a lower low to that. You broke the trend line. You came back. You couldn't retrace by more than 618. So we marked that 618. So at that point, we have that super micro, what we're referring to, that intraday is down also. Why is that significant to us? Why would such a short-term time frame be significant to us? Well, it's not all that significant. However, in the context of the big picture, now you can see where we're at. You have the secondary pattern down, the micro pattern down, and that super micro right there, that finishes it off. At that point, you have 3 patterns down, and look what happened. That happened to be a pretty good sell setup, didn't it? So once you take out this short-term trend line here, once you get what we refer to as a change of direction right here, once you close below the low of the highest closing candle of this little uptrend here, that's a fine sell signal right there, and it's in line with all those other sell signals. Let me pop out to the hourly chart, and you can see it right there. So the secondary pattern's down, the micro pattern's down, the super micro pattern's down right there. That's where we want to be getting short. This is an area on the chart where we definitely want to be trading because we have all those patterns combined. So there's our 15-minute chart. So we can see it again. That tip-off is that the resistance created by the micro pattern holds, and then we go all the way down to that 3-minute, and we can see that that little super micro pattern holds. That's where you want to be short the market. And thank you so much for watching the video, and keep in mind that the methodology you see, the tactics we use, are the same ones we teach at Trading University.